You know, even during this market downturn, I am still up on quite a few positions, not in share price, but with all the dividends I've collected. And if I would have bought growth stocks around this same time that I bought my high yield ETFs, I'd probably be in trouble trying to live off that. This is Mike, the tactical stock scalper. All right, all right. So yeah, let me start here with Nvidia. That thing is still a beast. Now, if you, from the time I bought in, okay, months ago, and because Nvidia fluctuated, went up, but stayed relatively high, I was able, and relatively flat, I guess you could say, I was able to collect all those dividends for all those months, right? And now that Nvidia is dipped and Nvidia with it, I'm finally down on share price. But with all the dividends I've collected for the last few months, I am still way up on that position. And it got me thinking, like when I was buying Nvidia, and there's some talk like, oh man, you should buy Nvidia instead. You'd get that growth. Well, now I'd be down. And if I was trying to live off that and I needed the money, what would I have to do? Sell my Nvidia for a loss, right? To collect revenue. So yeah, I mean, even during this market downturn, Nvidia is still powerful, and so are some of these yield max funds that I got in my account. Okay, next, IWMY. You know, I know that thing's going to reverse split, what, in a week or two, something like that. I am still way up on it in dividends. And even as the market's been dumping and this and that, IWM or the Russell went to its upper channel, has been hanging around in there. And still collecting dividends, not down on share price. Matter of fact, I'm down more on share price on Nvidia than I am on IWMY. And with all the dividends I've collected on IWMY, I'm way up on it. And again, it's just like, I was really wondering when I got into these funds, what it would look like during these market downturns. How would they last? How would they work? Well, we know when the market's going up and you can build and build and build the dividends, and that's revenue coming in, particularly when it's above your cost basis. When the market does finally drop, which it always does, and it'll always go back up and drop, stuff like that, I'm still way up on the positions and how powerful that is. Okay. I got 6. I got 7 positions, okay? So I've talked about 2 of them. Next up, AMZY. AMZ. I'm still up on it. I've owned AMZ for a long time, but you have to understand, like I've traded in and out of it. I've sold some off when it got above my cost basis for profits. I've taken dividends. I've done a lot of different things with AMZ because Amazon has allowed that to happen with the way Amazon has moved. It channeled for a while, which made it super easy to buy low, and then when it went up to the $200 level, take profits on AMZ and rinse and repeat constantly. But with all the money I've made on AMZ with dividends, trading in and out, even though currently it's below my cost basis, again, I'm up on a position fairly significantly. I mean, it would take a major correction for me to be down on Nvidia and for me to be down on AMZ. This little pullback is nothing. It's just, what is tis a flesh wound, right? It's nothing. And it just gives me so much confidence going in the future with these funds. Now, we'll see what happens during some big, massive correction or year or 2, 3 year long market downturn, right? Which is why it's important you have other streams of revenue, whether you scalp trade, whether you swing trade, whatever. That way you're always able to make money during different market conditions. I got a membership group. We talk about different strategies and ways particularly the 4 EMA strategy, to help make you money regardless of what the market does. I'll leave a link in the description if you want to join the membership group. Next up, YMAG. I'm still up on it. Still up, down on share price. All these I'm down on share price, okay? I'm down on share price on all of them. But with the dividends collected from the time I've held them, I'm still up on YMAG. So out of the 7 positions I hold, 4 are up with dividends. That's pretty good. And my account is still up, still positive, even because of the dividends I've received during the market run-up, okay? Let's talk about some ones I'm down on right now. Starting with WiMAX. Barely down on WiMAX. I'm down on share price, and with the dividends collected, I'm actually down on WiMAX. It happens, right? If you owned a bunch of other stocks, you'd be way down. I'm barely down on WiMAX. Again, the power of dividends coming in when the thing was channeling and staying fairly consistent and chopping around, I was able to collect all those dividends for all those months. But now I'm down a little bit on it, and that's okay. I've actually reached my share count on WiMAX. I'm not putting any more of my own money into it. I got to the share count I wanted on it. I'm just reinvesting the dividends until retirement, baby. That's it. Next, Phoebe. Down, well, I'm down pretty good on Phoebe. Down on dividends, down on share price. And yeah, so this is one of them that has dropped. But again, I've talked about Phoebe before. I like Meta. I think it's going to do well in the future. Will it or will it not? I don't know. I'm just saying that's what I think. Market doesn't care what I think. But Meta don't care what I think. But I think it will. So we'll see what happens. So to me, it's not a big deal. I'm still building that Phoebe position. And yeah, so I think it's fine. Down on it. So what? You know, just like if I owned a stock and if I liked it, I'd be down on it and I'd be adding to it, because that's how you gain wealth, is by buying cheaper, increasing share size, and getting more dividends for when whatever you have conviction in eventually runs up, right? Okay, and then my free position, SQY. What do I call it my free position? Because I've only built this out of profits from things that are above my cost basis, right? If things get above my cost basis, I don't reinvest the dividends back into whatever fund that is. I build a free position from those, right? No margin, no HELOC, no nothing. Totally free, don't have to pay nothing for it. And so my SQY is down. I don't care. It's a free position. Every dividend that comes in is free. So it doesn't, because it's built out of profits, right? Hopefully you understand that when I say that. Like, no money came out of pocket to build SQY. But it's down. Down in share price, down in dividends collected. Do I care? No. Because it's just free dividends every month. I don't care. Hope you enjoyed the content. This is Mike, the Tactical Stock Scalper, out.